Hey guys, what's up? I'm Mark, and in this channel, I talk a little bit about lifestyle, but I mostly talk about business and investments. A few weeks ago, I released my video where I shared with you my investment portfolio of 1 million pesos and how it's grown over the last 5 years. But as with sharing any intimate information, this often comes with even more questions. So I decided to make this video to answer some of your questions. This is part 2 of my 1 million portfolio reveal. Unfortunately, no, I don't have another million to be revealing to you. I wish, right? Again, if you are new to this channel and you haven't watched that video, you can check out that previous video on the link down below. But if you've already watched that video, we can move on and let me answer your questions. Let's go. So just as a refresher, I invested about 1 million pesos through different BPI mutual funds and UITFs. I did this in 2018, doing it in different tranches. To be completely accurate, I probably got to that sum over the course of 2 years. The objective of my investment portfolio reveal was really to show how the funds have performed over the course of 5 years. And again, the summary there is that I'm doing about a 30% return. Most of it was led by my investment in the BPI US Equity Feeder Fund. Unfortunately, the local stocks, the local equity fund, and the local balance fund is still at a negative. So leading the way is really that US Equity Fund through a US dollar denomination. Again, at that time, they didn't have the peso class yet, which is great right now for anyone who hasn't invested yet in this fund because you can already invest in this fund directly through your pesos. So anyway, 5 years ago, I had to exchange my money, my pesos, to US dollars to be able to invest in this fund. And I invested just below 10,000 US dollars. So the current value of that investment is now a little over $15,000. So this leads us to question number 1. What happens to the investment? Isn't it affected by the dollar exchange rate? Obviously, yes. That's actually one of the considerations why I wanted to invest also in the US dollar. I guess this doesn't make me a Forex trader per se. Yes, it's part of the potential loss or potential gain based purely on US dollars. My gains were at about 57%, but if you look closely, inputting the exchange rate, my gains were actually at 59% already. I gained an extra 2%, so the gains here over the 5-year period were not only about the US equities appreciation, but also because of the Philippine peso weakening against the dollar. So I think some of you might have an apprehension you might actually lose based on the foreign exchange rate. But as this example shows, I actually did gain from the foreign exchange. So this is just part of the game, part of the potential added gains that you could have. Again, you could invest in this fund directly with your pesos, and that's a viable option. But if you just wanted to make it a little bit more exciting, you could also invest in this fund exactly the same way that I did. So let's move on to the second question. One of my more attentive and keen viewers actually pointed this out to me and asked, so where is the BPI ALFM Global Multi-Asset Income Fund that we routinely talk about on this channel? So yes, thanks for pointing this out. I did miss it, but I missed it intentionally. Again, my objective of this 1 million investment portfolio reveal was really to show you how you can design your portfolio and how it could gain over the course of 5 years. Anyway, as I've invested in the BPI ALFM Global Multi-Asset Income Fund, I did not include this simply because it hasn't stayed there for 5 years just yet. So in some ways, yes, it should be part of my investment portfolio reveal, but since the objective of that video is really to show you again how your money could appreciate over the course of 5 years with UITFs and mutual funds, then I did not include this. And I guess while we're here, obviously, I've also talked about investments via eToro, via Shari, via GoTrade, via G-Invest, via Maya, via Seedbox, via Seed in Technologies, and so on and so forth. So my investments in these other platforms, again, I did not include in this purely BPI 1 million investment portfolio reveal because my investment in these other platforms are quite new. Again, that's maybe something that I'll do down the line. So moving on to our third main issue. This isn't really a question per se, but this was actually part of the original learnings, part of the original edit, but I felt that video ran a little too long. So again, another disclosure here. As I built that 1 million investment portfolio, again, it was done in different tranches, in different percentages, every payday, every time I had money that I was able to save. So it wasn't like I perfectly designed it to be 1 million pesos. At some point, it was actually more than 1 million pesos. I have actually reallocated some of those investments, and it was during the pandemic when the global stocks and our local market were really down. It really wasn't for the faint of heart, and that's putting it nicely. So anyway, I go back to that period because when the global and local markets were all down, the first thing that I did was not to panic. Of course, that's easier said than done. And the other strategy that I employed was finding better opportunities where you can reinvest parts of your portfolio. If you remember, during those early days of the pandemic, we were just really hoping to get to a point where things got better. Anyway, the markets recovered. But before it recovered, I was able to properly position, again reallocate, and do a switch strategy. The thing with being invested in a pool of funds is that while the risk may be lower, the growth is also a little slower. So rather than waiting for the entire index, the entire pool of funds to be appreciating, I did exit and liquidate on a few positions that I had. So I did trim down parts of my Philippine Stock Index Fund, and I also trimmed a bit of my 8FM Growth Fund. I actually moved this to a few local stocks. So from those mentioned funds, I reallocated some of my units into stocks of BDO, Metrobank, and Metro Pacific Investments. So what I actually did was take note of my losses and move them to these specific stocks and have a target where I knew that I would not only recover my position quickly, but already get to a gain. So case in point, for some of my positions from the Philippine Stock Index Fund, I invested this in BDO. My target was at 122 pesos to be able to break even. And at this time in 2020, BDO was trading just below 100 pesos. So it had to have a gain of over 20% for me to be able to break even. So if you check right now, BDO is trading just under 140 pesos. So my switch strategy has been effective here. Again, from my previous video, you know that my investments in the Philippine Stock Index Fund and the ALFM Growth Fund are still in the negative. But having moved some of these, I already have gains through the BDO stock. Also, I mentioned MBT or Metrobank earlier. So to recover my losses in the mutual fund, Metrobank had to trade at around 45 pesos. I was able to buy into Metrobank at 37 pesos. And I was able to sell it at a little over 50 pesos per share. I had gains of nearly 39%. So these gains were made possible by taking some of my position and putting it directly into stocks. So does that actually mean that it's better to invest in stocks directly? Not all the time. I mean, if you are risk averse, I think that mutual funds and UITFs would still be the best route. I myself really invest more in UITFs and mutual funds. But specific to this time, I understood that the individual performance of a stock, of a good performing company, could really outperform the entire market. So that's why I employed this strategy. And I also did not take too much of a long-term position here, simply because I understand that stocks, equities would be more risky since you are really invested in the company itself. Do I wish that I actually reallocated more of my funds into stocks directly? Again, in many ways, yes, but I don't regret any of my decision. I'm really more of a long-term investor. I'm not really trying to get in and out of positions that quickly.
That's what she said!
Find an investment or trading style that may be more fitting to you, to your pace, to your personality, and your livelihood. So for this switch strategy, I actually have to credit the Truly Rich Club by Bo Sanchez because I actually got this and other strategies from the Truly Rich Club. This is not an ad for Bo Sanchez. I know there are some of you who are quite skeptical, but for me, I understand what he's trying to do and where he's coming from. Of course, I'm not telling you to completely rely on it. Continue watching others like me, although I'm not anywhere on that level. Do your own homework, research, and again, find something that you become comfortable with. It's actually good if you have an understanding of how you like to invest and what really fits your personality. So I hope that you've been able to again pick up a few things or two. Maybe I haven't even fleshed out all the learnings. I'm sure there are things that you could pick up for yourself. Do you have any other questions about this investment portfolio reveal? Let me know in the comment section. If you've liked this video, please don't forget to like, comment, and consider subscribing if you haven't already. Thanks again for watching, guys, and happy investing!